From Wall Street to managing hundreds of millions in client money, Nick and I use our alphabet soup of credentials to discuss the investing and tax strategies that actually work. Oh, and we played Division I college football together, so strap in. This one hits hard. Let's go. Nick, holy smokes, man. This is not regularly scheduled programming. We had other things on the docket, but obviously when war breaks out and we are at the helm or right there with everybody else, we need to bring this up because it's got massive geopolitical risks. It also has massive market implications that obviously are playing out today. We're recording this on Tuesday. The market gapped down massively to start. S&P was down 2.5%. So was the NASDAQ and the Dow. International markets were down 4.5%. Gold's down, bonds down. There's been no safe haven outside of oil, right? To state the obvious, that is at the epicenter of what's going on here. So U.S. launches a strike on Iran. Nick, just give us some foreground context as to what led up to this. Why is this playing out? Because it came as a surprise to a lot of Americans, I think.
Yeah, I mean, going back to June of last year, we had the 12-day war where joint military operation between the United States and Israel to wipe out Iran's nuclear capabilities. We were told that was an overwhelming success, and I think the market kind of rejoiced that was going to be a short-lived event. But over the last couple of weeks, we've seen a big pickup in military activity in terms of the equipment that the United States was positioning over in the Gulf. So if you were looking at Polymarket, the odds of an attack or war with Iran started creeping up pretty aggressively. And, you know, obviously on Friday night, early Saturday morning, a large joint military operation bombing campaign was carried out by the U.S. and Israel, taking out the supreme leader of Iran. In response, we've seen Iran respond with bombing multiple neighboring countries, UAE, Qatar, Israel, and more. So it's been a very volatile couple of days in the Middle East, and the markets obviously, I think Monday we're kind of digesting it, and then saw the pickup in activity and is repricing things that maybe this is going to be a little bit more sustained operation in conflict than we saw last June.
Yeah, and I think
so. I think there's a lot of market impact, and then I think politically there's going to be some big fallout here. It doesn't seem to be kind of well communicated here by the administration, but yeah, how do you see things on that end of it?
Yeah, so let's get into the politics of the whole thing in 1 second. But I think really what the market's digesting last night is Marco Rubio's comments last night to the public saying that, listen, they have not seen the worst of our fury or something very close to that, and the worst is yet to come. And I think that gave the American public and the investing public this idea of, well, we thought this was going to be a quick and dirty like it was back in June. And now what you're saying is this is going to be a little bit more of a long, sustained campaign. And long and sustained could be 4 or 5 weeks, which is what they're alluding to at this point, which is significantly longer than our Midnight Hammer operation where we went in and took out those cells of nuclear sites back in June. So I really do think the politics of this all needs to be addressed. And I'm going to try to do my best because I really don't lean left or right to address things from both sides. So I'll start out on the anti-Trump side of things. So the first thing that they're going to invoke is the fact that he actually does not have approval to do this. He is calling this a war, and by direct, very crystal clear congressional kind of nature, he doesn't have the ability to do this without Congress. Now, we've seen Trump push the envelope on things and his ability and his power kind of without the ability for Congress to back it up throughout, whether it's tariffs, whether it's the operation in Venezuela, which he did similarly. That I don't think would be deemed as a war. But this one, he is, in fact, calling it a war. And so, Nick, I don't know if you have any thoughts on just that initial comment, and then I'll kind of go down through a little bit more of a laundry list of the anti-Trump campaign of what they'll say here.
Yeah, I think it's a messaging issue for sure in terms of what you're labeling it, and I think when it comes to the legality of things, obviously the way things are termed, phrased, and structured always has a big implication as to whether it was technically legal or not. So I think they got to be smart about how they move forward on that front.
Yeah, and Trump is an off the cuff kind of speech guy, right? Which doesn't help him because he did let the word direct war slip out of his mouth when he talked about we might have casualties or we likely will have U.S. U.S. troop casualties in this whole ordeal. That's what happens in war. Something around that quote, and he used that war line, which is going to come back and bite him potentially, certainly from a political standpoint. But I think really the thing that's bothering some folks and folks on both sides of the aisle, Trump supporters and non-supporters, is Trump has long been an anti-war involvement president, and that's what he campaigned upon, and that's what he said he would go through with. He bludgeoned Obama for keeping troops in the Middle East far too long, was his words, and costing American citizens and taxpayers billions and trillions of dollars that we don't have. And obviously our debt situation has exacerbated since then, and now he goes back to kind of that same old game plan. And so I think that one of the things that could be provocative to talk about is just what has been our experience going to the Middle East in the past? Because Iran and Middle East more broadly, they just religiously don't agree with us. And so therefore they have this innate nature to want to reach out and kill Western citizens and sometimes citizens of their own country. And so there have been a lot of what we deem to be bad behavior going on there. And so we went in Desert Storm. And Desert Storm, we took out a regime, and it gave way to a long, prolonged reign of Saddam Hussein. And Saddam Hussein ruled and used mustard gas until we went back in and took him out. And then we went back in 2001. And in 2001 was against Afghanistan. And we were there to take out the Taliban, which we thought we did effectively. And the Taliban is back in power now. And then we went back to Iraq under the pretext that they have weapons of mass destruction. And we didn't see that. And we took out what we felt was the right thing to do, tried to implement democracy. It created a power vacuum that has led to ISIS. And so it's really been a tough thing to say, case study wise, hey, here's the upside to us doing this. We've done this several times in the past. We've cut off the head of the IRGC or whatever, and it just grows it right back. So, Nick, that's going to be, the anti-Trump slogan of, okay, regardless of whether you campaign on this or not, regardless whether this is constitutionally approved or not, what are we doing?
Yeah, we've had absolutely terrible ROI on conflicts in the Middle East over the last 40 to 50 years, our entire adult lifetime. And I think that was really part of the draw to Trump. I think he put Jeb Bush in a locker during those debates with that bullet point pretty much alone. And so I think there's going to be a good portion of his base that's a little disillusioned and a little upset coming into the midterms that we're kind of following the same old routine that Trump deliberately ran on the fact that he was going to be different from that. So if you look at the estimates, and we're investors and putting money to work and for folks, and it's very difficult to look at the amount of money that we spent and that we've spent on credit and say that we should continue that policy and that way forward. So that's what folks on that side of the aisle or on that side of the argument, I think are going to be making and going to be disappointed in the decision that was made by the administration here.
Yeah. So let's flip the script a little bit here and talk about the pro-Trump support, right? Hey, let's give them the benefit of the doubt. And I think that there is some merit to their part of the argument as well. And I think that what they'll say is that Trump was being opportunistic here. And what I mean by that is Israel and Iran have been at conflict now for a number of months. And Iran's air defense system has been taking a beating from Israel's higher tech, higher end airstrikes. And so they were at a point of weakness. And with the Gaza kind of, shakeout that played there, a lot of the quote unquote terrorist cells that may be placed in Lebanon and places like that, they took a beating in that operation as well. So we knew via our counterintelligence, whatever it is, that the supreme leaders and a lot of the high-end IRGC folks were going to be at a meeting. And that is what gave us the opportunity to step in and strike. And it also comes on the back of, the protesters standing up against the IRGC, the Iranian, protesters, and them getting just mowed down. And so everything kind of came to a head, but it came to a head very quickly. And it's funny, we were repositioning our wartime kind of war chest to go to the Middle East. But I think that the poly markets read into that. But I think the layman, even myself, who pays a little bit more attention to politics than probably your average Joe, I did not anticipate this happening. But again, I think it's potentially that opportunistic end of things that really allowed them to do it and do it now. And I think that going back to, hey, all of our other mission failures or quote unquote failures that have taken place there in the past, whether it's, and by the way, this is nothing disparaging to any soldier or anything that put their heart, soul, life on the line. Like, this is not making comment on that. This is talking about just the broad political landscape and how things played out. Afghanistan, the Iraqi war, et cetera. There's an argument to be made that we fulfilled our mission at the time, but it gave way to a new sect, right? And so, but who knows if we had not taken out the bad behavior there before, how much it would have bubbled up? Have we made it better by just continuing to suppress it at different iterations? And yes, it spawns a new cell, but how bad would it have gotten if we didn't do that? I think is the other argument that kind of the pro-Trump camp will be making in this scenario.
Yeah, totally. And I think from the opportunistic perspective, I think it's important to recognize here maybe a bigger picture, and zooming out just from this individual country, this individual conflict, is the relationship that both Iran and Venezuela, whose leadership was also decapitated in a slightly different manner, and how that relates to China. I think that may be something that the administration, just from, again, zooming out, big picture strategy against what is your number one global competitor and adversary as they see it. If you're looking at the world in that kind of new multipolar order, they were huge suppliers of both Iran and Venezuela of oil to China. So I think, potentially that could be some of the rationale behind the decision to go forward with this strategy.
Totally agree. So Iran's oil was bought 90% by China. Venezuelan oil was bought 70% by China. These were both countries that were sanctioned for having done things politically and to their civilians, citizens, et cetera, that we didn't agree with, and most of the world didn't agree with. And so therefore, they were both sanctioned by us and by others. And the black market oil then got very, very cheap because there was no buyer for it. And the Chinese stepped in and said, hey, we'll buy it, bring it over. And so now they are the lead supplier to our biggest adversary when it comes to the global economic landscape. And I think there is absolutely something to that. But what I don't think many folks had on their bingo card is just how Iran would react to these attacks. So Iran just went scorched earth on all oil suppliers, the global oil supply chain. They didn't care about their neighboring countries who had, for the most part, the Middle East had taken the stance of, we're trying to stay out of this. We're not on one side or the other. We're not on Israel's side. We're not on the U.S.'s side. We're not on Iran's side. We're going to stay out of it and try to run our business, and that'll be that. Well, Iran said, you're not staying out of this. And their tactic was odd, that all of a sudden they started bombing Saudi refineries, Saudi Aramco, the one of the largest companies in the world. They start bombing their refineries. They go into Qatar and they bomb the pipelines. And so I think that their thought is, hey, although our neighbors might be pissed that we're bombing them, we're creating so much disruption right now to their overall business. By the way, we're going to bomb their hotels where their tourists staying at. We're going to make this whole Middle East so uncomfortable. We're going to drive oil prices so high. We are going to cut off your ability to supply the oil to the market and make the profits off it. And therefore, you guys are going to finally step in and say, guys, enough. And you're going to talk to the U.S. and say, stop doing what you're doing. Israel, stop doing what you're doing so we can get back to business as normal. And by the way, we're going to cut off the Strait of Hormuz.
Yeah, and I think that's the only play that they really had. There's no way to fight back militarily. Obviously, leadership has been wiped out. They're reconsolidating and trying to get organized. But that's the biggest pressure point they can put on the United States, Israel, and the rest of the world is to crank the price of oil, cause economic stress on those nations, and hope that pressure builds up to a point that they can outlast the strikes and everything else. That's the kind of game of chicken I think that they're playing at this point in time.
Yeah, so let's discuss a little bit about the reaction of the markets, and then we'll talk more holistically to just how to view these things from a broader scope. Because if you zoom in and you start making decisions in the short term, you're effed. But let's just talk about some of the things that have started to move in a big way. So the obvious one, the evident one, is oil. We are in the oil capital of the world, in effect, with this war playing out at hand here. So you've got Saudis under attack by the Iranians. You've got the Iranians under attack by the Israelis, by the U.S. You've got the Iranians attacking Qatar. You've got the entire oil basin basically, under disarray. And you have the artery, the absolute artery of oil shipments, ocean sea lining oil shipments coming through the Strait of Hormuz, which now the RGC lead commander is saying is closed. And so what you have is this massive disruption. And so yesterday you had a modest move in oil of 5 or 6%. Today, on the backs of the comments last night, where again, Marco Rubio says we're in this for the longer haul than what you all expected, bang, oil up another 8%. So you've seen a big movement higher in oil, which is interesting because there's such a knock-on spillover effect of oil, and oil goes into everything. So all of a sudden now you start to have inflationary fears, not only because oil prices are higher, but also because we're spending all this money on defense and missiles and all those things. So it's just this glut of money pummeling into the market, either via oil prices going higher or our spending, and then you have inflation going higher is at least the afterthought of that. There's this whole domino effect, but oil is at the epicenter, and that's what we're seeing right off the bat. Nick, does that surprise you at all?
I mean, it's the only card that they can really play, and looking at just the situation with the Strait of Hormuz, they don't physically have to blockade anything. The threat alone of attacking ships that go through there, insurance is what shuts down the strait.
Yep.
80% of oil tankers that travel through there are insured by a handful of firms out of London, and they've cut coverage. They're not writing policies on any ship going through there right now, so it's effectively closed. Right. That's a pretty cheap way for Iran to inflict economic pressure and pain on their opponents in this case. But to your point, it's everything right now. We've already had kind of a capacity constraints due to what's going on with Russia and Ukraine. And if you're zooming out and looking from a geopolitical perspective, Russia kind of a silent winner in all this. I'm not sure they're not all that upset that the price of oil is skyrocketing at this point in time. But yeah, it's for the rest of the global economy. The price of oil is going to bleed through to everything else. So these great CPI and inflation numbers that we were talking about last week are going to be under some pressure if this goes on for too long.
And I'd imagine you're going to start seeing price gouging at the pumps, because that's typically what happens. The price of gas goes up like an elevator and then falls like a feather. Right. So if they get any inclination that oil prices are going higher, bang, they're going to front run that. And you're already starting to see that move. Right. So that's important to think about as well. One of the other kind of angles to look at this through is the US dollar. And I think that there was this echo chamber of, US debt is going crazy and all of this, and therefore the dollar is going to continue to weaken. It's going to be the US dollar's demise, yada, yada. In the last 2 days, you've had a 2% movement higher in the US dollar. And guys, this is not crypto. This is not NVIDIA stock. This is not something that moves 2% in 2 days. That's a 3 standard deviation move. Think about everything that's priced in US dollars. It's ratcheting higher, right? And so with that, you've given way to international stocks selling off. You've given way to the US bond market, which typically in an environment like this would see bond rates falling because there's fear and people look for a flight to quality and a guarantee behind the U.S. government to back it. But because the dollar is strengthening so much, you've got obviously bonds getting beaten up a little bit as well. Not nearly as much as stocks, don't get me wrong, but gold also getting beaten up on this, which is a flight to quality, safe haven type trade. So I think the point of this is when you zoom in on things and look at them in very finite periods of time, there might be a time where nothing in your portfolio is working. Nothing. Unless you own oil right now, nothing is working today, right? But that's today, right? Typically, a diversified portfolio allows you some cushion in places where not everything correlates at the same, going up at the same time and going down at the same time. On hyperbolic days like today, you might have red across the screen. And I think that's what most people are experiencing right now, which has, throughout history, caused panic selling. Now, I think our investing public is getting better, and I hope they are. Nick, are you going in and just fire selling everything in your portfolio today because it's all red?
No, I've been putting incremental dollars to work today for myself and a bunch of our clients. I think you've got to keep dollar cost averaging into some of this, and we've got unfortunately we've got a very long track record of military conflicts that have broken out over the course of our country's history, and the way the market has performed immediately after and then over the long term. It's so we're putting money to work a little bit here today.
Yeah, I think that what's really important to understand is, and we'll look, more short term in nature. The Venezuelan event, the next day when we went in and captured Nicolas Maduro, the next day the market was up. Midnight Hammer, the last in June of 2025, where we went and hit those nuclear cells in Iran, the market was up. Really, what you're looking at in short term, right, is not what you're supposed to be focused on. You're supposed to zoom out a little bit. So long as a war doesn't cause a recession, 3 months, 6 months, 12 months out, all of them, you're positive. But in the short term, it gets scary and it gets dicey, and you do see downside gaps taking place. It didn't happen in the last two, but it has happened in the past, whether it be things that took place in, all the way back in Pearl Harbor. Jeepers, couldn't get that out of my mouth. Like we have history to look at all of these things. War is not indicative necessarily of a negative stock market. It's if war causes recession, right? It's the economy, stupid. That was the old tagline that Bill Clinton used to win the presidency. It's the economy, stupid. So the economic backdrop and the fundamentals are what drive the stock market, not necessarily the noise that we experience in the short term.
Yeah, without a doubt. I mean, you go back to the Cuban Missile Crisis, we had potentially nuclear missiles pointed directly at the United States. After that situation, there was an immediate 7% drop. Recovery time was 2 weeks, positive on the 1 year basis. I mean, you can, again, go through these list of events, First Gulf War, 9/11. There's always a big initial downside from just the shock of whatever geopolitical event is occurring. And then again, over time, the market, we work through those things. And again, stock prices are based on cash flows and the underlying companies and earnings that they deliver. So do not, it's the scary things. If you're watching the news, there's a lot going on, a lot of uncertainty, but it's important not to let that psychologically impact what you're doing in your portfolio.
Yeah, and it's funny to me when you look at history because everyone thinks, the market's so much more sophisticated now than it was in the past. That's not the case. Like, looking back at these dates, Pearl Harbor, 1941, day one drop. So remember, this is Japan blindsiding us, sucker punching us, hitting us on the Hawaiian Islands. We didn't see it coming. Market gap's down 3.8% in day one. 1 year later, positive. Took 1 month to recover. Meaningfully positive 1 year out. Cuban Missile Crisis, down 7% over a few days. 2 week recovery time. Positive a year out. Gulf War, down 10%. Several months to recover. Up 20% a year later. 9/11 attacks, down 11 week one. 1 month recovery. 1 year out, positive 15%. Iraq War, modest. 1 year out, meaningfully positive. Russia-Ukraine is actually the only one that bucks the trend. So the Russia-Ukraine war played out in 2022. And so there was a lot going on in 2022. If you remember back then, one, the supply chains got disrupted with the Russia-Ukraine and oil got disrupted really. But that was also the time where we had massive inflation, and that was a function of us shutting down our economy for COVID and then pumping stimulus checks, PPP loans, et cetera, into the market. So the Russia-Ukraine war 1 year out was basically flat after that. But moving forward from there, we've all seen the explosive returns from 23, 24, and 25 in subsequent 3-year period. So it was a 1 year indigestion period, but there was a lot more at play there than just obviously what was going on between Russia and Ukraine.
Yeah, and you can. I mean, this has been such a crazy start to the year. There's been a lot going on in the first 2+ months here. So it's understandable to be, if you've been tracking everything that's been going on. There's been a lot of events, from the tariff ruling, everything that's going on in software, the Mag 7 underperforming. It has been an extremely busy start to the year. So we can sympathize and empathize that people may be feeling a little bit exhausted, and that all kind of cumulatively wears on you. But when you're tired, that's the time you have to be disciplined the most, whether it's in it's the fourth quarter of a football game, or it's the third day of March in 2026. You got to stay disciplined and stick to your process in these time periods.
Yeah, and I think that we've talked about panic selling now, right? And Dalbar has a long-term study that shows over the past 50 years, the average investor investing in stocks, this is not their combination of everything, has invested and made an 8.1% return, whereas the market has returned north of 10. So that just shows you that the bad timing nature of how folks are buying or what they're buying just isn't what you're supposed to do. In 2022, you had a pretty horrific type scene where the average investor was down 39% in 2022. The market was down 20%, the S&P 500. So how you get from down 20 of the S&P to down 39 by the average investor is either they're buying stuff that's crazy, or they're buying and they're selling at the absolute worst time, and probably some combination thereof. But I think the other side of that coin is also a dangerous game, and one that people often feel more comfortable doing, and that's just sitting idle in cash. And so that's a battle where, especially we just talked about, hey, this may, allude to what's going on in the Middle East right now, might leak into higher inflationary numbers. Okay, well, right now you're already at current inflationary rates of 2.7%. Net of tax, net of inflation, you have negative real returns, so your purchasing power is being eroded. But now if inflation goes higher, right, and no guarantee that that'll happen, but directionally that's what this tells us, that gets even worse. So Nick, is sitting on cash the right decision to be made if you're not going to be, panic selling? I get that, but what about the cash on hand?
Yeah, I think it's tempting to do that, but looking at negative real returns, that's a tough thing to square, and it isn't prudent from a long-term financial decision-making standpoint. There are assets out there to buy right now that have been sold off a little bit, that can get you, that isn't going out fully on the risk spectrum, that can get you pretty conservative or moderate returns. So sitting in cash and sitting around trying to time the markets, not a successful strategy over the long term.
Yeah, and I think the realization that it's not an all or not game. I think that's a lot of people, how they think about things. Hey, are you in or are you out? Right? Mm-hmm. So ideally what your portfolio has is something that's going to provide less downside risk. So the stock market prior to us going on here was down 2%. It was down 2.5% to start the day. It had rallied back some. So you're down 2%. So it's not, okay, I'm going all in and I'm buying this thing down 2% because I'm buying the dip. But maybe it's putting 25% of your money to work that you have earmarked for longer term investments that make sense for stocks. Or maybe it's you're putting 10% to work. And what you're trying to do is you're never going to be able to catch that bottoming point. But the market usually does kind of V-shape on a bottom where it comes in, pukes, and then bounces, right? And so you're not trying to time that puke point, right? And that could have been today, right? The market gapped down. Literally everything across the board was down. And it's rallied back some since then. But the point of that is, who knows whether it's today or we bounce and we get back to positive and then it gaps back down again. But if you're firing little bit by little bit, you're trying to round out the bottoming process where you're buying before it and you're going to be buying it after. But all of this, you're getting in at a better entry point than you were just 1 month ago, which is the name of the game, buying low. It doesn't mean you're buying the bottom, right? There's a difference between buying low and buying the bottom. You want to be opportunistic to have an area of the portfolio to pull from at a time like this where something, although everything's down today, but not today, something, bonds, if you have for dry powder, or maybe you held gold and it did really well. Okay, maybe it's a good point to trim that winner on the other side to buy a dislocated market. And you can trim systematically if gold continues to run, trim off a little bit by a little bit, take some winners there, put some hay in the barn and buy the stock weakness if it persists. Because again, we talked about the fact that this could be a 4 or 5 week campaign, which I don't think was what most folks expected. I think they expected that kind of midnight hammer type reaction that took place back in June. That's just not this, and we're seeing more and more proof of that as the leaders of our country come out and allude to that. So it's all about that fundamental process of having a diversified portfolio where something else is working that you can trim from to add on dislocation and weakness, but stay disciplined and stay willing to do it.
Yeah. And there's a chart out there that just really highlights how difficult timing the market is over time. If you take a 20-year time period, 03 to 23, you put $10,000 in the S&P 500, you cut off, if you miss just the best 10 days of market performance, you lose more than 50% of the returns. What a lot of people don't realize is that 70% of those best 10, 7 of the best 10 occurred in bear markets.
Right.
So sitting in cash, trying to jump in and pick that exact point in time as to when things have bottomed out is impossible to do. It's a much, as you put it, rounding out that bottom is by incrementally putting dollars to work is really the best strategy for investors out there.
So don't panic. Don't be overconfident that you can find that very bottoming point and wait and then fire it, because one of two things happens there. You either fire too early and then it gaps down further another 5-10%, and then you're scared, you pull out, and that's when it bounces. Or you didn't fire anything and it bounces all the way back and you go, I missed my opportunity, I'm still sitting in cash. So I think the overconfidence, the overability of now, or the overthought of your ability to now this thing is just folly, it's fool's errand, etc. So get systematic, get a game plan together, and get money to work in chunks and increments on dislocation like this. This is your opportunity to be buying. Is it the bottom? We don't know. Let's be clear on that. But nor do you, and nor are we overconfident enough to say, hey, we're going to fire all of our eggs right now. It's just, that's not the way this plays. So Nick, as we kind of try to round things out here a little bit, what should we expect going forward? That is such a hard question, but give me your thoughts, and I can share some of my thoughts as well.
Yeah, I think just looking at this situation, we've been here before. Unfortunately, geopolitical conflicts will continue to arise as long as human beings are human beings. But wars come and go. He's like, but your portfolio, if built right, is going to outlast them, right? So I think that's important. I think as this continues on, we're really going to be, I think the markets and consumers alike are going to be really focused on the price of oil. I think that's going to be a big driver as to how the markets continue to behave, and then also kind of what direction this conflict will move in. And I just think, again, control what you can control. That's your behavior and your mindset in these environments. Stay disciplined, stick to your plan, and over the long term, I think that's going to work out for investors out there.
Yeah, and I'll take the other side of it, not the market direction, but just the actual war that's playing out, and try to give our thoughts around that real quick. I think right out of the gates, folks were underwhelmed by the response of Iran. And I don't know whether that was a function, because when we're doing kind of intel work on Iran, it's not all clear. They're not sharing their information. Hey, here's how many ballistic missiles we have. Like that's not how you operate in a wartime fashion. So we don't know exactly what their stockpile looks like. But I think it's going to be dependent upon how they react. Do they start to up their ante when it comes to firing missiles in the Middle East, whether it's deterring our missiles that are coming in and trying to ward that off, or what seems kind of crazy in their kind of characteristic of just, hey, let's just start firing things in all directions and flail a little bit. It almost feels like they're just kind of flailing and see what kind of cohort we can drum up and piss off enough where they finally say, hey, the U.S., like, you got to back this down because you're screwing up my UAE, my Dubai. You're screwing up all of our economies right now because we are a big tourist destination and no one feels confident coming here right now. And our biggest profit driver is oil, and they're disrupting the hell out of this market as well. So although it seems crazy, this flail type approach, I do see a little bit of logic behind it where people are going to start to get pissed off if the missiles keep raining down out of the sky and deterring what is their economic driver, being tourism and oil. So it'll be interesting to see it all play out. I guess at the end of the day, we appreciate you guys listening in here. Hopefully you got some better context as to how this thing's playing out, why it's playing out, the political ramifications, what the pros and cons for the Trump supporters and the anti-Trump crew will be saying. And there's some merit to both sides of it. Stay disciplined with your investing approach, and we'll chat with you again in a week. Quick ask. If you're enjoying the show, hit the follow and drop a rating. It helps more folks find our podcast. Thanks so much.
The information discussed in this video is for educational purposes only and should not be considered investment, tax, or financial advice. Investing involves risk, including possible loss of principal. Always consult a qualified financial professional before making any investment decisions. Past performance is not indicative of future results.